Manufacturing, we saw the PMI data coming out about a week ago showing that the manufacturing sector of our economy is shrinking. I think the number came in at 48.2. Anything below 50 shows a contraction. So we shouldn't really expect much out of these numbers in a couple of minutes' time, I wouldn't have thought.
Well, yeah, it's certainly true. I mean, the PMI data concurs with what our own quarterly survey found earlier on, showing that the expectation amongst manufacturers is that there will certainly be a slight contraction over the next 12 months, moving to a more positive position in about 2 years' time.
Yeah, so let's just remind ourselves about the significance of the manufacturing sector of the South African economy. Still around 16.5%, 17% of the total economy, isn't it?
Yes, that's correct. That's correct.
So it's an important...
sorry, I just wanted to say 16 or 17%, but then it also needs to be mentioned that the multiplier effect of the manufacturing sector keeps it within the top 3 industries in the country, with agriculture and manufacturing probably being the most important.
What has the recent history of the data been? This is the data we're waiting for. It should be coming out any second now. It's the May manufacturing data, but contextualise the data we're just about to get by going back over the last year. Has there been a steady slide, or is this a very, very recent development, i.e. with the PMI coming below 50, that we're starting to see a contraction?
Look, there has been periods where there's been a slightly more positive position, certainly in the fourth quarter of last year, when we saw that the rand was somewhat trading at somewhat weaker levels between 8 and 8.50 consistently over the quarter. We saw that manufacturing did pick up quite a bit. It remained quite resilient in the first quarter. Currently, the rand is also trading at weaker levels, which is helping its resilience. But of course, we're seeing global demand slowing down, as well as domestic demand, which has traditionally supported local manufacturers, coming under huge amount of pressure because of cheap and illegal imports coming into the country from markets abroad that are now struggling to find places to send their products to.
It's been relatively recent that the rand has been above 8 to the US dollar. The rand weakness is, as I say, a fairly short-term phenomenon. And during the time when the rand was so strong, do you think that the South African manufacturing sector actually became more efficient and got used to a strong rand? There's all sorts of calls from various unions and other parties that we should have a much, much weaker rand in order to stimulate exports and therefore stimulate manufacturing. That doesn't always hold true, does it?
Look, whether the rand is trading at stronger or weaker levels, manufacturers should always try to produce their products more efficiently. So I don't necessarily think that has a greater or lesser effect on manufacturing efficiency. But what we do know is there's some of our main markets that we trade with, where there is significant intervention in currency trading levels. That puts South Africa immediately in a less competitive position. Because it's difficult for us to compete. You know, if our currency is naturally stronger, trades has very little intervention, makes it very difficult for us to compete where there is greater intervention.
Within the manufacturing sector itself, I mean, it's one word that covers a number of industries. Which ones have done particularly badly, Coenraad?
Look, at the moment, we find that, you know, structural steel, glass, that's both architectural and automotive glass, and then paper products, certainly amongst our members, are some of the categories that are registering the greatest challenges. There's also, in the FMCG sector, we find that processed foods, there are also significant challenges, and the majority of the challenges that they are experiencing are around trade barriers in the markets that we export to, pressure that they are under domestically because of cheap or illegal imports coming into the country, or unfairly incentivized imports coming into the country, and then of course there's also the monetary policy aspect, and administered prices, which has a significant cost push effect.